Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. You're watching Power Breakfast on CNBC TV18. On to the earnings corner. The remainder few. Yesterday we had Tata Steel, which reported a good set of earnings. The India business was stable, while the European business was a positive surprise. Nigel's here, joins us with the key takeaways. Morning, Nigel.
Well, morning, Mangalam. As you said, yes, the India business was more or less stable, but Europe business, in fact, that looked very good. But if you just pull up the last 1 month chart from the lows of less than 500 rupees, Tata Steel has seen a rally of close to around 15% also. You'd say how much of the good news is already in the price. But keep in mind, if you pull up yesterday's intraday chart, you'll see that in fact the stock ended virtually at the low point of the day, telling you that there was, a sense, or the whisper number could suggest that maybe the numbers could be a bit of a miss. I'll tell you what, if you just had to sum it up, these numbers look quite good. Now, let's run you through the numbers and, in fact, what were the expectations as well. Top line growth of around 27%, a little better than what the sheet was working with. Remember, Bhushan Steel as well has been consolidated in these numbers. But the EBITDA number of around 6,500 crores, that's a little lower than they estimated, 6,800 crores odd. And that led to a bit of a profitability miss as well. We were working with the number of close to around 2,500 crores odd. But there was an exceptional charge to the tune of around 335 crores odd. That's on the back of, additional interest on differential costs. That's a royalty, really. So that 335 crores, that explains why there was a bit of a miss in terms of the bottom line. Remember, the debt in the books had increased. The finance cost was up nearly around 24%. And Tata Steel saying now the debt in the books is more than 100,000 crores approximately. That's because they're consolidating Bhushan Steel in their books. But for Tata Steel, as we told you when in fact we were giving you the estimates, the most important is in fact the geographic breakup. So let's go straight to that. India business, we already had the volumes numbers with us. That was closer towards around 3 million tons odd. So we were looking at the operating profit. Now, most on the street were working with the number of around 5,300 crores to around 5,500 crores. It came in at around 5,200 crores. So if we extrapolate that, then the EBITDA per ton came in at around 17,200 rupees per ton. That appeared as a bit of a miss in comparison to around the 17,500 that, the street was working with. Importantly, the management says that the costs were increased by around 400 crores odd. So adjusted for that, adjusted for those other expenditures that the management believes are one-off, rates as well as taxes. If you adjusted for that, then it definitely comes in higher than the 17,500 rupees per ton that we were estimating. So adjusted Tata Steel India operations numbers look good. Moving, then we have Bhushan Steel as well. That's consolidated in their books as well from 18th of May 2018. They've given the turnover, they've given the EBITDA number out there. They've taken some write-downs as well, but the management in the con call said that Bhushan Steel's EBITDA per ton is more than 9,000 rupees. So it's only going to be up from year on. Europe business looked very good. We had the volumes that were more or less flattish, but the EBITDA per ton was more than $100 per ton. And that gets a thumbs up. That was much better than the $70, $80 per ton that the street was working with. And Southeast Asia, smaller part of the business, but that as well performed quite well in terms of a profitability number, both on a year-on-year basis, even on a sequential basis, it was up by nearly around 15%. So sum it up, adjusted India numbers more or less in line. Europe looked very, very good. And, now we're looking forward to positives coming out from the Bhushan Steel acquisition as well. Only a word of caution, if they're going to be too aggressive with Bhushan Power and Steel, then that will not be too good. But otherwise, the numbers look good.
Okay, all right, Nigel, thanks very much for that. In fact, let's listen in to what the CEO and MD of Tata Steel had to say.
We continue to progress on our strategy of expanding our footprint in India. Our Kalinganagar phase 2 expansion is progressing well, with work already started on the cold rolling mill complex, which will help in enriching our product mix and optimizing cash flows. The other milestone in our growth plans is the acquisition of Bhushan Steel during the quarter. I'm very happy to say that the integration process is proceeding well, and all key stakeholders have been very supportive. We are confident that this asset will add significant value to our portfolio. On June 30th, we also signed the binding agreements with ThyssenKrupp to form a 50-50 joint venture in Europe, and we are now working to secure all the relevant regulatory approvals, and we expect to complete the JV formation by the end of this financial year.
All right, sticking with reviews of numbers, we had Cadila, which reported numbers yesterday that were largely in line. Margins were below estimates, but Ekta's here to tell us the key takeaways from the earnings call that took place. Ekta?
Mangla, we had Cadila, which already reacted to its numbers in yesterday's trading session. That stock was down 6% reacting to its numbers. Now, in terms of the conference call takeaways, you know, the company continues to guide for a similar or better US sales in FY19. This is despite a sluggish Q1. So that means that the run rate or the asking for the next 3 quarters increases significantly. But the company is very positive in terms of the approvals. In fact, they're expecting 50 to 60 launches in FY19, and they're expecting the launches to pick up in the second half of FY19. Now, India is expected to be a low double-digit kind of growth in FY19, and that should be something to watch out for. Now, there was a lot of speculation with regards to the Windlass Health acquisition that they made yesterday, that, you know, they spent a huge amount of money for just a partial amount of stake in the company, and hence, you know, compared to the sales figure, it looked quite expensive. Now, in terms of that, they've said that the reason for the acquisition is to add capacity constraints for the US. The commercial benefits, however, is going to show only in FY20. Now, Windlass has a US FDA site which is inspected. They, in fact, received an EIR just a couple of days ago. They had received minor observations from the US FDA, which are resolved. So, the company eventually aims to acquire 100% of Windlass. And why Windlass versus, you know, any sort of site in the US or UK, etc., is because the company said that that wouldn't be, you know, viable for them, and this would be an acquisition where they could, you know, start site transfers. It would be commercially viable FY20 onwards. So overall, there are a lot of moving parts to the Cadila guidance, so there will be a lot to watch out for in the next couple of months.
All right, so that is something that the street will definitely keep an eye out on. But the stock that was in focus yesterday was mildly higher, was Sun Pharma. In fact, the entire pharmaceutical pack from the frontline space were higher. Sun Pharma also reports its numbers today. Ekta, what is the street expecting?
Well, you know, Sun Pharma is expected to be a subdued quarter, Manglam. Nothing great in terms of the Sun Pharma numbers, but because a lot of the good news is already priced into the company because of the halal clearance. So what the street will be watching out for especially will be the specialty business, you know, in terms of commentary, as well as what they are guiding in terms of halal launches going forward. So overall, the revenue is expected to grow up around 13-odd%. The margins are expected to sustain at above 20-odd%, which would be an improvement year on year, and the profit would be over 900 odd crores versus a loss. Remember, same time last year there was an exceptional outflow. So in terms of the US business, yes, there would be pricing pressure. We already know the Taro numbers were impacted because of pricing pressure, so that would continue in terms of a trend. India should bounce back because of GST-led normalization again, but according to me, commentary would be the most important for Sun Pharma.
All right, from the pharmaceutical space to the infrastructure space, Dilip Bilkon, that will be another number to watch out for. Anisha is here with the key expectations. Anisha, what does one expect from a company where the stock is so volatile, 1200 to about 600, back at about 850? What is the street expecting in terms of numbers?
Well, yes, the stock has been really volatile, but to be honest, the earnings performance for Dilip Bilkon has been good. In fact, in FY18, the revenue grew by around 50%, and the guidance for this year is also strong at around 10,000 odd crores, and hence the expectation is that the earnings momentum will continue in Q1. So we're expecting a revenue growth of around 23%. The margins should stay steady at around that 18% mark, and the profit is expected to jump up by around 23%. Now, do remember, this is one of the company where margins are much better than other peers, given the fact that they have their in-house facilities when it comes to the overall integration. Other than that, do remember that there was a high base in Q1 FY18 as well. It was the pre-GST quarter, and we saw a bit of revenue booking in the last year, but nonetheless, the street is expecting a good quarter. Other than that, the benefit of financial deleveraging is expected to come in this time around. So we're expecting a decline when it comes to a finance cost. Other than that, the tax rate is expected to normalize a tad bit, so that might offset each other. Other than that, the order winnings in this quarter were not very great. It was just around 300 odd crores. The management has already given us that number, so that is something that we already know. But in terms of the commentary, we'll watch out for how the money inflow from the Shrem deal has worked out. Other than that, are they, changing their guidance of the 10,000 crore revenue, the 18 to 20,000 crore worth of order inflow that they were expecting, any change in that? Because remember, as you were mentioning, the stock has been really volatile, and the management commentary is something to watch out for. Back to you.
Okay, all right, Anisha. We'll take a break now, but up next, sources say that the government is considering to list ONGC on an overseas exchange. More details once we're back. Stay tuned. Welcome back. Well, Jet Airways continues to be in focus. The NSE has sought clarifications on earnings deferment and stake sale plans. The airline has responded in a late-night statement. Sonia is here with all of the details on this. Sonia, go ahead.
Well, there are so many reasons why Jet is in the news, right? All the wrong reasons. And Jet came out with a slew of clarifications yesterday, late in the night. They did mention that they are, seeking more time from the audit committee in order to finalize their accounts. They will decide on when they will come out with their Q1 earnings. No timeline has been specified just yet. They say that the statement that jet-lagged airlines plans a $400 million stake sale is speculative in nature. There's no truth to it. In fact, the statement that the Jet auditors may be quitting is also factually incorrect. Also, remember, yesterday there were a lot of rumors doing the rounds about Jet defaulting on its loan obligations, becoming an NPA for banks, etc. They once again, remember on Saturday as well, they had made this clarification that they continue to be a standard account. But yesterday, they once again clarified they continue to be a standard account with banks. They've not defaulted on any of their loan obligations. And in fact, the lenders have issued certifications of payments at regular intervals for them. So a lot of these clarifications coming through. But I reckon that the stock could still be under pressure today because of, all the negative news flow.
Absolutely. It will be very interesting to see where it pans out or where it goes, primarily because also it is in the F&O ban. But let's hop on to another flight, Sonia. SpiceJet reporting its first quarter numbers. What is the street expecting?
Well, the street is expecting better numbers than its peers for sure. So on the revenue front, it's expected to be a strong set. A revenue growth of 23% is what Edelweiss is estimating at about 2,300 odd crores. Now, the passenger traffic growth for SpiceJet was very strong this time around. It was a growth of almost 21 odd %. However, as we know, competition is elevated, so yields are expected to be subdued. Now, the big positive last quarter was that yields did not fall, despite, peers like Interglobe seeing a big fall in yields. So last quarter, yields were in fact up 8% on a year-on-year basis. This time as well, they've managed to hold on to their yields quite well. The yields will remain subdued, but it will still be a growth. So yields are expected to rise about 0.2% on a year-on-year basis. We are expecting about 3.98 rupees per unit. However, the stock is trading close to its 52-week low. Higher ATF prices will definitely put pressure on its profitability this time around. Back to you.
Okay, all right, Sonia. Thanks very much for that. Well, let's move on to a CNBC TV18 exclusive then. We learned from sources that the government is considering to list ONGC on an overseas exchange, namely Singapore or London. This move will grant the government better access to funds as well as give it a better global reach. Anshu Sharma has filed a report on this.
That's right. We understand from government sources that government is mulling listing of ONGC in a global stock exchange. We understand that global exchange could be Singapore Stock Exchange or London Stock Exchange, where ONGC listing could happen. The idea is to basically better access of funds, better and cheap access of fund and global reach of ONGC across the world. Remember, there are a lot of M&A activities which happen both in upstream and downstream companies globally, and in 17-18 budget, FM Arun Jaitley had said that India needs an oil giant which could compete globally. So this idea could be to make ONGC a global company which could compete in the mergers and acquisition globally, like BP and Shell, which operates globally. We also understand that the last week, Prime Minister had a meeting with the energy and mining sector government officials with regards to target, and that's when the idea of ONGC listing abroad was discussed. Remember, ONGC is the largest exploration and production company in India and has some 41 projects globally via ONGC Videsh. We reached out to ONGC for a comment, and ONGC has replied that they would not like to comment on this story.
All right, Anshu, we will track that story pretty closely, but a panel has recommended some major changes to SEBI's settlement mechanism. This panel is calling for changes to the eligibility criteria, scope of settlement, among other things. Yash Jain is here with the details on that. Yash, what are these changes that have been proposed?
The recommendations which have come from the A.R. Dave committee essentially aim at overhauling the regulations, the current regulations around the settlement procedure under the new SEBI Act. Essentially, this particular committee has identified various stages of the settlement procedure and then recommended amendments at those various stages, starting from the very important point of who is eligible to file for the settlement procedure. Here, remember, companies or the parties which come under the SEBI, SCRA, which is the Securities Contracts Regulation Act, as well as the Depositories Act, are identified under the securities law, which enable them to file for settlement. Now, this particular committee has essentially recommended that the parties which come under the Companies Act should also be brought under the Securities Laws Act, which will enable them also to file for settlement procedure, essentially widening the scope of this particular settlement or the consent application process. Also, the second important point, who is not eligible to file for settlement? Here, the committee has recommended that any party cannot file for settlement for a particular application of the same default if the first settlement application has been rejected by the board of SEBI. Also, currently, any party can only file for a second settlement application with a time interval of about 24 months between the first two applications. Here, this particular committee has really recommended with respect to removal of this cooling period entirely of the 24 months and essentially having no cooling period if the course of action between the two settlement applications is completely different. Similarly, the scope of settlement. Here, market regulator SEBI and the committee has essentially recommended that cases like insider trading, fraudulent and unfair practices should also be settled. Remember, these cases are accepted at this point of time under the settlement route, but they are not settled by market regulator SEBI. Similarly, there have been recommendations with respect to withdrawal of the settlement application as well as the composition of the HPAC, which is the high-powered advisory committee as far as the settlement process is concerned.
Okay, all right. Thanks very much for that, Yash. Well, we'll take a break now, but up next, we'll get you a check on all the cues to watch out for from the futures and options space. Stay tuned. Welcome back. Well, let's talk about commodities and currencies. Manisha Gupta joins in with all the updates from that space. Manisha, over to you.
That currency actually continues to dominate the space, but we have seen the commodities individual fundamentals also come on board. So the crude oil prices really seem to be reacting to the OPEC monthly report that was released last evening. We have seen a bit of a gain come in the Asian markets. That's because the Saudi output for the month of July has seen a decline. Saudi Arabia also says that the OPEC output and the Saudi Arabia output has been on the weaker side as there is enough supplies in the global markets and there is lower demand for its crude. And that is the reason they also have seen a revise or revision in this year and the next year's global demand growth. For this year, they're looking at a growth of 1.64, and for the next year, they're looking at 1.43 million barrels per day of a demand growth. It is the non-OPEC supplies which actually show an increase, and that is the reason OPEC seems to be taking a back seat, and we have seen prices gain on the back of that. So while the crude oil prices are doing positive, not all is well when it comes to precious metals. The gold prices now have slipped below the psychological level of $1,200 per ounce as well. The ETF holdings, the investment buying has been on the weaker side. With the strength in US dollar, and you also have seen the hedge funds actually hold or add to record bearish positions now in case of gold. So this is one area that hasn't really played by the textbook. There's no safe haven buying coming in. And with the kind of decline that we have seen come in on charts, it does look bearish even from these levels.
All right, Manisha, thanks a lot for that. Gold and precious metals is something that the street will be watching out for. Meanwhile, let's take a look at the cues coming in from the futures and options space. In fact, before we do that, just look at how the cash market behaved. So just take a look at what the FIIs did between August 6th and August 9th. We were talking about that purchase that came by. Between August 6th and August 9th, the FIIs bought a total of around 1,500 odd crores in the cash market. Just the last two trading sessions where we saw a bit of a downtick on the Nifty, and the FIIs pulled back almost all of that money. So on August 10th as well as yesterday, we saw a pullback of close to 511 and 972 crores. In the last two trading sessions, the FIIs pulled back around 1,500 crores itself. So that is something that the street will definitely be watching out for. In index futures, the FIIs sold about 722 crores yesterday, and with that, the long exposure, which was at 57-58%, has now come off to about 55%. No real worries out there. In index puts as well, the FIIs added some long positions as well as some short positions. So positions being built all over the place. Similar was the case in index calls. There was some writing to the tune of about 10,000 contracts, and some purchase to the tune of around 7,200 contracts. A couple of positives from yesterday's session: the fact that the futures premium expanded after sitting at around 9.75 points, now it's around 25 points, and the put call ratio, which was elevated at 1.8, has now come down to a more believable 1.66. Some writing at the 11,400 call, 11,500 call, some support at the 11,200 put. Individual stocks: Apollo Hospitals, a lot of long positions added yesterday, a lot of short positions added on Sun TV and India Cements, and some shorts added on NBCC and Shriram Transport as well.
Okay, all right, Mangdam. Thanks very much for that. And on that note, we're going to wrap up our breakfast. Stay tuned. Bazaar Morning Call comes up next.